So that is exactly. Dilip Bhat of Prabhudas Lilladher joins us right now. Thank you so much for joining us, Mr. Bhat. As a person who invests, who looks at the fundamentals to invest, you must be happy that the Nifty is correcting?
Well, in a way, yes, because, this market, as I have been maintaining now for quite some time, always remains a buy on the dips market. One has to just keep on accumulating gradually as and when the market dips. So some small correction here and there is very much possible. So even if Nifty corrects by about 100, 150, 200 points, even from this level, I don't think that I'm too worried about that. I think some kind of correction will always be looked upon as extremely healthy, given the rise that we have seen in Nifty and most of the stocks in the last couple of months. So I think overall, net, I think this market, one should remain, I think on a longer term basis, one can definitely remain positive and one can pick and choose of the, as far as the stocks are concerned.
Okay, that's exactly what I wanted to know. Pick and choose as far as the stocks are concerned. Where is it that you're still finding some value, Mr. Bhat? Because if you look at the 1 year forward PE for all the big cap counters, they seem to have run up quite a bit. I mean, you're just about reaching a space where you would be saying that, okay, the intrinsic value is relatively close to the current value, but in most of them it's outweighed quite a bit.
You're quite right. Actually, this market right now, purely on a theoretical basis, is the fundamentals, the prices are significantly ahead of the fundamentals. But we should not forget that even in the previous government's tenure of the 5 years, what we had seen was that though nothing was happening on the ground, market remained optimistic. Right now we have a very decisive mandate and a government which is expected to take the country on a growth path. So I think people are not too worried about stocks being expensive in the short run. So I think the markets will remain a little expensive, but over the next 2 to 3 years, as the growth picks up and as the valuations get correctly in place, so I think that is where the entire perspective is. So I think I would still look at some of the stocks, particularly like for example, I would think that Axis and ICICI Bank would still look good in the front line, because I will have a mix of both the defensives as well as reasonably good proactive stocks. So I think Larsen & Toubro would also qualify for that, though it is ahead of the fundamentals, but that still remains the pick of the lot in that particular sector. I think Tata Motor remains pretty interesting to acquire in the long run. I think there is still a reasonably good amount of value in Tata Motors. Reliance is another stock which can give a reasonably good return. And I think slightly in the mid caps, I would look at something like a Federal Bank, which looks pretty good and interesting from the longer term perspective. UCO Bank looks very interesting. So this is just a kind of a mix and match of some of the few stocks that I think has a good potential.
You're saying that within the you would be looking at the defensives as well as the cyclicals. But if I look at the defensive, for instance, let's take the FMCG players or the pharma players or even IT. Everything is pretty. They're trading at quite high multiples. If I look at an ITC and consensus forward, 1 year forward, or even a blended FY15 forward earning, which includes this quarter, ITC is trading at about 25 times. 1 year forward, it's trading at about 23 times. Now, these are pretty steep valuations for what would qualify as a fundamental counter. And if I look at some of the pharma majors, like let's say something like a Lupin or a Sun, they're all trading around that 20-22 zone.
So how I look at some of these companies is, say, let's take for example the pharma names which you mentioned, whether it is Sun Pharma or even Lupin. While Lupin has been growing its bottom line at 25 to 30%, So these kind of valuations are not really expensive if you were to take a next 2 to 3 years growth of say 25-30% for Lupin, for instance. Though Sun Pharma has a much sober growth, but if you see the kind of cash that Sun Pharma throws out every year, and if you were to take the valuation based on the cash that it generates, I think once again, though it is expensive, it is still a must and still looks a lot more defensive. Now, as far as ITCs of the world are concerned, I think they have always remained expensive, not for anything, but for the simple fact that for the last 4 to 5 years, you have seen that they have sustainably grown at 18%, and the kind of ROEs that they have and the kind of cash that it generates, it will always get a premium valuations, though the valuations appear a little steep, but still, if you take a slightly longer term view, I don't think that they are really out of whack.
HUL trading at about 34, 35 times. If you look, if you take 2 year forward, then it comes to about 30 times. Does it deserve that kind of? I know the numbers were outstanding this time, but does it deserve that kind of a multiple?
So, you know, we may keep on feeling a lot more apprehensive about these valuations, but if we acknowledge the fact that these kind of stocks which have always delivered in spite and despite all the kind of problems that the economy has gone through, and I think more important is markets, not just in India but world over, are giving a very steep premium to the kind of cash that the company generates. And if you see that plus the payout policy, and if you see the ROEs are simply astonishingly very high, close to about 100% for levers. So I think with those kind of combination, we may feel apprehensive at every level, but these will remain expensive for some more years to come.
Mr. Bhat, I remember several years ago you were looking at the alternate energy space. You were quite, you were quite positive on alternate energy, on smaller counters, which had a not a direct play, but you were looking at environmental companies which are environmentally solid. Are you still looking at those things?
Well, I think in the chain scenario, what we find is that, you know, they are all, some of these companies, they survive on a lot of subsidies, lot of government support, lot of government regulations. Now, over the last couple of years, the way we have seen the policies, how they unfold, the consistency in the policies are missing, and hence to take a long-term view on some of these companies in the sector becomes extremely difficult. So, you know, that being the scenario, we are slightly staying away from all those sectors where the government intervention is going to remain pretty high and which is also going to decide the fortunes of the company.
All right, I just want to get your view on some of what is happening in with the Modi government. A lot of focus on PSUs. For instance, we've just got some information that the government is thinking of transferring all PSC thermal and hydropower assets to NTPC and make it into a mega conglomerate, a huge, massive PSU power player. Are you looking at buying and putting money into the PSU counters?
Well, I think PSU as a theme itself will consistently get a re-rating because this government's focus has been to make PSU its showcase and make it as formidable and as strong and growth oriented as possible. But within this space, I think NTPC still remains the pick of the lot because that's a company which has got 18,000 crores of cash in its book, more than 100,000 crores of market cap if I am correct. And I think what is more important is they are also going to acquire assets, especially those stressed new power assets which are almost completed but yet lying for the want of funds. So I think if NTPC steps in and acquires some of these, which is what is there on the radar, I think it will help NTPC, and I think that's what we are looking at, that in next 3 to 4 years, once again NTPC will have a good block of coal assets, which also will be a phenomenal play for NTPC. So all in all, I think NTPC within the sector appears to be reasonably very good long-term bet.
Sid, Prabhudas Lilladher, the house has been very good at picking out of the box ideas which have turned out to be multi-baggers. Can you give our viewers 3 such ideas which are not there in the public domain, not being discussed that much, but which your house is focusing on?
Well, I think the way the markets are close to 8,000 on the Nifty level, it's not easy to identify the multi-baggers. And in case of those companies, it requires a huge amount of leap of faith, because the economy is still not turned around, and it's still it's the optimism which is what is prevailing all over. But I think still, having said that, I think some of the companies that really look really strong, according to us, one is LG Balakrishna. I think that looks pretty good and strong and formidable. Though it has run up, I think it has still got an extremely good scope for it to go up. I think I would still bet behind something like Voltas, which has had a good run, but still it is off from its multi-year highs, which is still almost 1/3 of what it used to trade at. So Voltas is another stock which can really give a reasonably phenomenal returns in the next 2 to 3 years. So other one is, which I already mentioned, I think something like a UCO bank or a federal bank qualifies for that multi-bagger tag. I think that they also look reasonably good.
It's worth pointing out to our viewers that sometimes, when the markets have run up, multi-baggers become multi-draggers. So with that warning and with that health warning, thank you so much, Dilip Bhat, for joining us. Pleasure having you on this show. We're going to take a short break and we'll be back in just a couple of minutes. Stay with NDTV Profit.